It was another great trading week for myself and the Discord members. Some fantastic winning trades. Some of them are still running, and of course some losing trades as well. With that being said, let's get into this week's Forex forecast. As always, we will start with the DXY, the US dollar index. So you can see last couple weeks, we did create a weekly trend line to the upside. This was completely expected. If you've been following my channel for the past several months, in the past year, we've been talking about this monthly demand that was in control on the dollar. It has taken us several tries to actually push up now, but the fact that we have broken this high, the fact that we have created a weekly trend line, tells me we are easily pushing up to this weekly supply at 103.06. So even though I think we could see some bearish weeks pull back more towards the trend line, I'm expecting the US dollar to actually continue up to contact that weekly area of supply. Last week I was talking about how we were expecting a pullback, and on the daily time frame, we got a little bit of a pullback, but if we throw the channel tool on it, we are still somewhat overextended. I mean, we are sitting at the 50% mark of this channel. So it could either really go both ways. It's really tricky to tell. We'll have to monitor the lower time frames, but since we are at the 50% mark of the channel, we could expect price to go up or to go down. I know that that's, anybody can say that. However, if price was at the high above the upward 50% of the channel up here, I'd be saying, okay, we're due for a pullback. And we did get just that. That's what I was saying last week. If we were below the 50% mark, then I'd be saying, okay, we're more likely to get the push up. Right now, we're basically sitting, it's really either way. It is hard to tell. Ultimately, I will be bullish on the dollar. We have two 4-hour demand zones sitting down below with a 4-hour trend line, so that could definitely indicate we could be pushing lower. Our first zone is down at 137. I think we could see a move off of that zone, and the better zone is actually sitting down below at 99.74. So I think that's where either one of these zones is where the US dollar will most likely turn around and continue that trend up to that weekly supply zone that I was talking about at the very beginning. All right, looking at the weekly chart of the Euro US dollar. So we did create a weekly downward trend line. We recently targeted the weekly low liquidity. I think with this trend line, it's really indicating we will be pushing down to that weekly area of demand to target this area of liquidity. And a huge shout out to everybody who watches my channel. We just did another donation to the Sick Kids Foundation because all of the ad revenue from these weekly Forex forecasts is donated every single month. So much appreciated to you guys. Continue to watch the video, hit that like button, and subscribe if you are new to the channel. As far as the daily chart here goes of the euro, we are very overextended. If we throw a channel tool, it'll be very visible as we are actually sitting at the bottom end of that channel. So I am expecting to see price go up, maybe even to the daily supply where we can then see a move to the downside. I'm just saying we are very overextended. We got a nice push down. I'm expecting to see some strength here in the euro. So as far as trading it goes, right now we have this 4-hour upward trend line. It's pretty decent. Let's throw a channel tool on this trend line to take a look. You can see a little bit overextended. So it might be worth it to wait for below the 50% mark. And then as long as this trend line's holding and we are below the 50% mark, you could justify day trading longs on like a 15-minute time frame or a 5-minute time frame. You could really even hold all the way up to this 4-hour supply. That's where I think we could be headed, and that's where I think we will most likely see a move off of. What I like about this supply zone, there's something I don't like about it, and there's something I like about it. So you can see what I don't like about it is it's a reaction from this previous area of supply. And if you go back and watch my forecast from a couple weeks ago, you could see I literally called out this trade for everybody to see. So if that's not a reason to hit that like button and subscribe, I really don't know what is, right? Calling out these amazing free trades. What I like about this supply zone, so I don't like the fact that it's a reaction from the previous zone. What I like about it is that daily zone I was telling you guys about earlier, it's right inside of the daily zone. So it's a set and forget 4-hour trade inside a higher time frame zone. So a wider stop could be worth it here, but ultimately I think that is where we could see the euro turn around, and as long as this 4-hour trend line's holding, we actually could expect the euro to continue to rise. Even though ultimately we are bullish on the dollar, which means bearish on the euro, I think it wouldn't surprise me to see like a week or two of strength in the euro US dollar. Moving on to the forecast for gold on the weekly time frame, we recently broke that low. That is definitely a significant event in gold. I don't know if you guys can see these black dotted lines. That's my monthly area of demand. That's where I think we could be going. I think absolute bottom price of gold is like $29.75. I think that's the absolute bottom. That's where I think we will be pulling back to, and that'll be a great dip buying opportunity. There's evidence to suggest we will be getting that as well. As you can see in the daily time frame, beautiful daily downward trend. We have the daily supply above. That'll be a good area to look for swing trading shorts. using a confirmation trade. I think that makes a lot of sense. As far as trading gold goes now, you guys know last week I was pointing out this 4-hour supply, and we have already contacted that trade. It's not looking terrible. It's not looking great so far. We are a little overextended on the daily chart to the downside, so it wouldn't surprise me to see a small move and then a break of the zone. So I think somewhat aggressive trade management off of this 4-hour supply would be good. So right now we're really just waiting to see what takes place with this 4-hour supply to see if this trade will work out or not. If you want, as long as the supply zone's holding, you could look for 5-minute time frame confirmation trades inside of that 4-hour area of supply. If you are bullish on gold, again, being bullish on gold, not the best situation due to the fact that, again, the daily trend is down and we are inside of that 4-hour area of supply. But if you absolutely have to get in long, what I'd be doing is watching this 1-hour trend line. As long as the trend line is drawn from here to here. As long as this trend line is holding, 5-minute time frame longs are going to be good. And if we remove that supply, we're going to have probably a little demand zone down here, and that would be a decent area to look for a potential long trade. But I definitely would be aggressive with trade management, considering the fact that we just broke a low on the weekly, and we have a daily downward trend line on gold. All right, on to the forecast for the S&P 500. We will start with the daily, and then I want to show you the weekly time frame. So on the daily chart, obviously the overall momentum is up, but look at this, very sideways price action. So what do we do in these situations? We actually look to the higher time frames to determine if we're most likely going to break the low or most likely going to break the high. So again, we are going sideways. The question is, where will we be breaking out to? Will we be breaking out to the upside or to the downside? And if we look at the weekly time frame, to me, it's very clear where we are most likely going to be breaking out. I mean, look at this beautiful trend to the upside. If we throw a channel tool on it, we are a little overextended, I will admit. I mean, not super overextended. We are at the 50% mark, which is kind of overextended. So seeing a pullback, it wouldn't like completely surprise me, but you know, since we're not sitting above the 50% mark up here, I am expecting price to actually continue to rally, which is why we have been looking for longs in the S&P 500. You guys know, if you watched last week's forecast, absolutely nailed the 1-hour chart, and then we are simply waiting for this 4-hour demand zone down below. And I mean, almost no draw, pretty much no drawdown from this trade right here, and it is still running. This risk reward tool is just to show you guys, you know, where the entry and the stop was. This trade is still running, and I'm expecting it to go even higher. I mean, targeting the high over here from this trade, it wouldn't even be unrealistic. So I am currently actively managing this trade, looking to continue to move my stop loss up and at least target the all-time high. I would love to get a push up and continue to move my stop loss up and actively manage this trade. So what a trade from that area of demand, called out beforehand for the Diamond members in the daily market breakdown video, which you can see on the screen right now. That's a recording of me calling out this exact 4-hour demand zone setup for the Diamond members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session, where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So as far as trading the S&P 500 goes now, we have the 1-hour supply zone above. I am personally ignoring it. I actually don't short any indexes, any stocks or anything. I just don't. Part of my trading plan. But we do have a supply zone that's actually very mediocre. The reason I want to keep the supply zone on my chart is because I want to see what removes it. If it gets removed and if there's a demand zone there, that's going to be our demand zone for a very nice re-entry here on the 1-hour chart. Not re-entry, but adding to your trade, or even if you miss that trade down below, that's going to be our next good trade, potentially even move our 4-hour demand zone stop loss below that zone as well. So this week I'll be watching to see if we can remove that supply and if we have a high quality demand zone trade to add to our S&P 500 long trades. All right, moving on to the forecast for the USDJPY. We recently made an all-time high in the USDJPY. Very rare in the Forex market, so it's always fun to see that happen. We have a beautiful weekly trend to the upside, so we are expecting this trend line and trend to continue to hold. Obviously, since we pushed to the all-time high, we've seen some sort of manipulation here as we push to the all-time high. I'm sure a lot of people bought the breakout. I don't know why people do that, but they probably bought the breakout and they got completely owned here. So that's why having stop losses are good to do. As far as trading it goes now, I'm really not seeing anything other than this 4-hour demand down below at 160.30. And it's very mediocre at best, guys. So if you want to trade at this zone, you can. I would just either be aggressive with trade management, meaning look for 1-to-1, move your stop to half risk or break even as soon as you can, or wait for the zone to be contacted and then look for confirmation on a 15-minute chart or a 5-minute time frame. That is actually preferred. I'm not a day trader, so I won't be doing that, but that's what I'd be doing if this demand zone is hit. It's really all I'm seeing. Other than that, there's really not a whole lot going on the USDJPY, ladies. Moving on to the forecast for the GBPUSD. We recently created this beautiful daily downward trend and trend line. We are currently reacting off of the trend line. The trend line is drawn from here to here. This is a reaction so far off of this daily trend line. So I do think shorts are somewhat preferred here. Doesn't mean we can't get in long, but obviously with that trend line, shorts are going to be preferred. We had a 1-hour supply zone. I was actually pointing out this trade to the members, and I was looking forward to catching a nice trade off this zone. But what do you notice? It took so long to get a pullback here. I don't like this trade anymore. And I mean, we got so close to the zone. It's a little too close for comfort. I like when we have a liquidity trap before the zone, but I want to see it somewhat like that. I like a little bit of room between the liquidity trap and the zone. That's a little too close for me. It's not bad. I mean, the zone itself is very nice. The basing is good. The move away is very good. So if you want, you can short at the zone at 133. That is our supply zone for a short trade, guys. We have to be very careful with that, though, because it's old. So aggressive trade management would be good. It wouldn't surprise me to see a 1-to-1 off the zone. It really wouldn't. So really, that's all I'm seeing on the pound is waiting for that supply to be hit to look for a confirmation or a trade to the downside, a quick one. And you can even look for like 5-minute time frame confirmation in there. I think that would make sense as well. And if we remove it, then we could look for longs off of the demand zone that does remove it. So that's what I'd be waiting for here on the pound. Just be pretty careful here, guys. Definitely want to be aggressive with trade management considering it's such an older zone. Moving on to the forecast for the USDCAD. So on the weekly time frame, we have blasted out of this downward trend line and both of these areas of supply, leaving us with a new weekly demand down below at 140. So this weekly zone is going to be a great swing trading opportunity to look for H4, H1 confirmations inside of that weekly area of demand. We also have a daily demand zone that's inside of that weekly. So that's another thing that's really going for us. On the 1-hour chart, we recently broke this downward trend line. So it's really just sideways soup, as I like to call it. There's really not much going on right now on the USDCAD. I was looking forward to maybe getting a pullback down to near this trend line. This trend line is basically irrelevant at this point. I'm actually going to delete it right now. We're really just going sideways. We have a good demand sitting down below at 1.40. It's right before that weekly zone. So I think a wider stop here would be good for a set and forget. So that's really the only setup I'm seeing right now on the USDCAD, guys. I mean, we have such an older 4-hour supply zone from back here. It's pretty much irrelevant. So we're kind of just keeping it on our chart to see what removes it. But for now, guys, the USDCAD is really not that tradable unless we can get a new trend line here. And then we'll talk about that after we can get that. But for now, USDCAD definitely not on my radar for trading this week. All right, moving on to the forecast for the Aussie US dollar. The weekly trend line recently broke the last couple of weeks. We are sitting right inside of our support area. We don't trade support, though. We trade demand, and this is our support area, aka liquidity. I think we could see a small move. Ultimately, I think the bigger move is going to happen from the real demand sitting down below, not this support and resistance type trading situation down here. As far as trading the Aussie goes now, we have a couple of options here. Shorts are preferred because we are expecting price to go down. Right now we have a 4-hour trend line to the downside. We are sitting near that trend line. So as long as that trend line is holding, 15-minute time frame shorts are going to be good. And what I mean by that is however you trade. I trade supply and demand, so I would be looking for 15-minute time frame shorts. I'm not a day trader, but if I was, that's what I would be doing to the downside as long as the trend line is being respected. If you trade support and resistance or whatever chart patterns, it shorts only with this trend line on the 15-minute time frame, guys, or the 5-minute time frame. Let's say we break this trend line. That's fine. We then hold off on trading altogether, and we wait for either one of these 4-hour supply zones to be contacted. The first one is at 0.70. The one higher is at 0.712. So as long as this trend line's holding, you could look for shorts. If the trend line breaks, we hold off on shorts, wait for this supply to be contacted, then we look for a trade to the downside off of that supply. And then even if that one breaks, we have another one above. So that's how I'd be trading the Aussie right now if you are bearish. If you are bullish, take a look at this 1-hour chart. Very interesting chart. So we had a nice little 1-hour zone down here. It was a weird kind of zone. Look at the weird basing here. If I just zoom in for you guys, you can see we kind of had the this basing candle here was a little bit big. We kind of had this one as well, right? This was all kind of basing here. I didn't want to draw the zone very large. So that's why I have right here, wider stop needed. This is what I was telling the members in the daily market breakdown video the day before this trade was triggered, that we needed a wider stop below here. So the zone did break how I drew it, but as far as the trading situation goes, that was a winning trade if you had your stop wider. And that's trading psychology right there, hey guys. If you don't understand when you have to do that, you're not going to understand how to trade properly. And that's all to do with trading psychology. If you guys need help with that, check out my podcast, the Stoic Trading Psychology Podcast. Also have a YouTube channel for it as well. It'll help you out with situations like this. Let's say you didn't listen and you had to stop here and you just barely got stopped out and price went to take profit. That's going to damage your psychology, and my podcast will help you stay in line. So you definitely want to check that out. As far as trading the 1-hour chart goes now, we are pretty overextended. We had a little trend line here. I kind of blurred it, or I made it a little bit less prominent here as it just recently broke. To me, this is the real 1-hour trend line. And we have a nice 1-hour zone down below. The move away is, I mean, as good as it's going to get. Basing is decent. So if we get a pullback near the trend line, I think you could justify 5-minute time frame longs, but I'd be aggressive with trade management considering the higher time frames. And then pullbacks down to that 1-hour demand could be good as well. But again, aggressive trade management considering the higher time frames, meaning don't look for a massive trade here. Meaning if price comes down to our zone, you have your entry stop. If price goes in your direction a little bit, move your stop to half risk or break even. And then when it gets to 1-to-1, keep moving your stop up, take some profit off the table. That's how I'd be managing this trade, again, due to the higher time frame situation. Moving on to the USD Swiss, to me, looks like we are pulling back. And where are we pulling back to? That's always a very important question. It's a nice little daily demand down at 0.79. So I think that's where we're most likely headed. This is where we could look for H1 confirmation trades inside of that daily zone. So that'd be a great swing trading opportunity. If you look on the 4-hour chart, we have pretty great options here. We have demand zone number 1. I think we could see a small move off of that zone. I think we could see the bigger move off the zone that's lower at 0.79. And we have a third zone all the way down below at 0.789. So it's really 3 good zones. And I know that's a tricky situation, guys. But honestly, you just have to let your risk reward play out in the long run. You have to be okay with taking 3 losses and being down 3%. But maybe you win a 3-to-1 trade the next week and now you're back to break even. You have to be okay with that. It's all part of trading psychology, guys. But at the end of the day, 3 pretty good areas of demand here on the 4-hour chart for trading. Again, I think we should be somewhat aggressive with trade management off of the first zone, and then the zones down below, I think we could justify looking for larger and better, bigger moves off of those zones down below. Alrighty, on to the forecast for oil. Nice to see oil falling off of a cliff here. I am hoping it continues to fall. What I think we could see is a small move off this weekly zone, kind of a dead cat bounce here, and then maybe get a small push up. Ultimately, I think the bigger move is going to happen off of this demand zone down below. I was waiting for that zone, and we couldn't quite get there. But that's where I think we will see the bigger move off of that zone on oil. But since we have a weekly demand and control, we definitely are preferring long trades right now. The issue is it's going to become very tricky to trade right now. On the 1-hour chart, we have a trend line, very large trend line. So really, we don't want to be shorting because of the higher time frame demand and control. It's just stacking the odds in our favor by preferring longs. So at this point, if we can remove this 1 hour trend line, any demand there, that's going to be our long trade, guys. And that's really about it on oil right now. Really tricky to trade because we've fallen off so aggressively, and when we get aggressive fall offs like that, so overextended, it's really hard to get a lot of zones. So we're just simply being patient right now, waiting for some sort of confirmation as we come off of a weekly area of demand. Onto the Bitcoin chart. This is a little bit of a tricky one. Right now we have a weekly trend line to the downside, so that is a bearish sign. On the daily chart, we have a daily downward trend line, but there's still 2 hours left in this candle. But to me, it looks like it's going to break. And if we break this trend line, we're most likely headed up to this daily supply I've been talking about the last couple of weeks. And that's going to be a nice potential swing trading opportunity inside of that daily area of supply. So as far as trading Bitcoin goes right now, I'd be purely looking at it on the 4 hour time frame. As long as this 4 hour trend line is holding, 15-minute time frame shorts are going to be good. If we remove the trend line, we will most likely have a little demand zone sitting down below here. It's not there yet. We need to see this trend line removed, but if it does, that would be our demand zone for a potential pullback entry to the long side. Not my favorite zone. I mean, the move away is great, but I don't like this situation here. So if you're going to trade at this zone, if the trend line breaks, I would look for confirmation on the day trading timeframes. I think that would be much, much preferred. But remember, we don't have a zone yet. We need to see the trend line removed, and then that is where our demand zone is going to be sitting on Bitcoin. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that, as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.